Good day. Welcome to Dylan's Daily Show. So if you've been paying attention to the news, you would know that the stock market took another plunge today. The Dow Jones took another plunge, another 1,000-point drop. And this has a lot of people wondering what the hell is going on Wall Street. Why is this happening? Before it was like the people were saying, oh, no, it's fine. It's going to correct itself. It did. And then now it's tanking again. So what is going on? Well, I want to go over in this video why the Dow Jones is doing this, why the stock market in general is going down, and explain that it's not really that big of a deal. And we're going to get into the reasons behind this happening and how you can, kind of go forward with this and plan accordingly if you invest or if you're just curious about the stock market, because I think it's a pretty good video to make. So I've gotten a lot of things. So one of the main reasons why this is happening is people are concerned about inflation. Investors are concerned about inflation. And as most of you guys know, stocks have been going up since the election. I mean, we've broken records on the Dow Jones. I mean, it's been an amazing year for the stock market since Donald Trump won the election. And because of that, we have a strong economy, low unemployment, there's more jobs, companies are paying workers more. But businesses are going to have to start paying, or they are paying employees more, but they're going to have to start raising their prices on their products to make up for what they're paying their employees. And that's a concern that a lot of people are having. So like as the wages are going up for employees, people are saying, okay, we might have to start paying or raising the prices on our products because of that. So they can afford to do that, because there's a lot of reasons why a company wants to pay an employee more money, right? It's not just about like, oh, the tax bill's good. Right? That plays a lot into it, but it also has to do with things like they want to keep workers who've been working there for a long time. They want to attract new employees, so they increase the prices. And because of the tax bill and because of other policies Donald Trump's put into place and just a strong economy in general, they have the ability to do that. So they're taking advantage of that. Price inflation is low even when the economy is growing. Now, the Fed combats inflation by increasing interest rates. Now, an interest rate is essentially the price of money. So if you have the interest rates, it's essentially how much money costs, essentially, right? So if interest rates are higher, we'll get into that in a second. But anyway, so people are afraid, and the Fed is afraid to increase interest rates because there is a lot of inflation right now, right? And we're doing this on purpose to try to combat other countries manipulating currency and everything like that. This has to do with trade. Again, this is a much bigger deal than just a stock market. The stock market does not act independently. There's a lot more that goes into this, and there's a lot of of policies, not just from the president, but from other people, and other branches of the government that play into this, but there is inflation, and the Fed usually combats inflation, like I said, by increasing interest rates. But they're afraid to do that because they think it might hinder economic growth. So they think that, if we increase the interest rates or the price of money, then that might harm the economic growth that we're having right now, which would be bad. Because when the Fed raises interest rates, the cost to borrow money increases, right? That's what we were just talking about. So companies would have to pay more for loans. So you might see that, affect how companies are handling the strong economy if the cost of money goes up, right? So that's essentially what the Fed is concerned about. So they're working really hard with that. Now, a big reason the stock market has grown so much is due to the growth in corporate profits as well, which is increasing as well. Companies are doing well, and investors are pushing up the stock prices because of that. So you've got the economy doing well, and then investors are pushing up the stock prices, and that's why you've seen such an immense growth in the stock market over the past year. And again, this goes back to a lot of different things, but a lot of it has to do with Donald Trump's policies and the strength in the economy that we're seeing right now. But when interest rates increase, stocks often fall. And because the Fed has, and Janet Yellen just stepped down from the Fed, by the way, a couple of days ago. She was the chairman of the Federal Reserve, but we've got a new Trump appointee in there. But because the Fed has been talking about increasing interest rates, some investors are saying, hold on a minute, the stocks are going to fall because the interest rates are increasing. We might want to pull our money out and put it into a more secure investment opportunity, which are U.S. Treasury bonds, which are much safer than the stock market. And if you look at U.S. Treasury bonds, it just recently hit a 4-year high. In fact, today they hit a 4-year high. So investors are pulling money out of the stock market and out of companies, and they're putting them in U.S. Treasury bonds because they just hit this 4-year high. So that's another reason why, because investors are pulling their money out. So again, there's a lot going into this. This isn't just as simple as like, oh, it's Trump, it's Obama, it's Trump, which is what the media is essentially saying. If it's going up, it's Obama. If it's going down, it's Trump. Going up, Obama, down. It has nothing to do with that. Right, it has very little. I mean, policies impact it, of course, but there's a lot of other decisions, and like the Federal Reserve and things like that are making these decisions as well. And obviously, we can talk about the increase in the stock market. We can go over quantitative easing, which is a practice that the Federal Reserve participates in, the government. We can talk about that, but I'll save that for another video. We're just going over what's going on right now. And the reason that Treasury bonds have increased to a 4-year high is because the tax bill has caused the Treasury to borrow more money, which puts more bonds into play. So it's caused an increase in bond yields. So that's what's going on with that. But anyway, again, this is just a correction. This isn't anything to panic over. I'm not concerned about it. We'll see what happens over the next couple of days, but the stock market was on such a roll that there has to be some sort of correction, right? It's not going to just skyrocket forever, right? I mean, a lot of people thought that it was just going to keep skyrocketing. That's not going to happen. But I just wanted to make this video to kind of explain to you guys what's going on with the stock market and what you can expect in the future. From what I've been reading, what I've been watching, and just, I invest myself, and I've been, it's just a correction. It's just a correction. It'll sort itself out, and we'll be back to normal here in a couple days. But anyway, thank you guys so much for watching the video. If you enjoyed, make sure you like and share, and don't forget to subscribe so you don't miss out on any more. I will catch up with you guys next time. Bye-bye.